Hello, traders. Good morning. How are you doing? My name is Alberto Alvarado, and I'm broadcasting live from Mexico City. Here is 8 a.m. in the morning, 1 p.m. GMT time. Today is Wednesday, August 24th, 2016, and welcome to your WoW Trades webinar. WoW stands for Week Over Week Trades. And well, without further ado, something interesting to read. Let's start. A little bit about me. I know that you've already read some information in this when you registered for the webinar, but I would like to just to highlight some things. My name again is Alberto Alvarado. I'm the one in the picture. I've been trading the markets for more than 10 years, a little bit more, and I started in 2005 with inherited money that I lost in 1 month. Then I decided to take it seriously. In 2007, I started grasping some of the first profits of my and that time approach. Then the 2008 crisis, I lost it all again, and I decided to begin it and to start developing my approach from scratch, including some intuitional and emotional elements, and they have worked for me pretty well. And well, that's pretty much what you will see during the webinars, how that approach is applied into how I understand markets. And besides that edge that includes includes those elements, I use traditional elements as the technical analysis, MACD, RSI, stochastics. I don't believe in custom indicators nor in indicators or robots that you need to buy, because I sustain firmly the idea that the one that needs to adapt is the trader and not the indicator. So, well, hopefully what you see and listen here will help you to develop your very own trading decisions. The value-added services are based on demand, on outcry demand. If people like what they see and find useful the information delivered here, I trust that they will let some comments on the binary.com email or in my personal YouTube channel that I always insist you to subscribe. Why? Well, because it's pretty simple. This is a weekly based webinar, and at times I need to update my insights or some trades that we could have opened during the webinar, and usually wait 1 week could be too much in sometimes. So I strongly suggest you to go to YouTube and type IBB's Trading Room channel. You will see here my picture and you click subscribe. I have used already this channel to update some trades at times. So I strongly suggest you that if you're interested in following what is delivered here, that you can go and subscribe, and you will have the updates at the time that they happen, and you won't have the need to wait 1 whole week to see what happened to that trade or to some trading insights. Today's agenda is very basic. The last webinar was Wednesday 18th, I believe, 17th. And the data that we're going to analyze is the UK retail sales month over month on Thursday, 1 day after the webinar. Thursday, August 18, 2016. And after that, we are going to analyze the price action opportunities that could have a reason after that news being released. We're going to compare that with the live trading environment to detect possible live trades opportunities. The fourth point is review adjustment of previous week's trades. Up to now, we don't have any open trades because if you've been following my webinars, the pound, the cable, the one that we are watching now, it's in consolidation mode. Last week actually entered into the most conventionally consolidation mode. We're going to analyze that. And at the end, the questions and answers. If you have a question, feel free to drop in the chat box. Okay, first of all, the fundamental highlight is the UK retail sales month over month. This is the one that the laser is signaling. As you can see, it's really outstanding. I mean, the markets, the forecasts were almost predicting 0%, 0.1%, that is really nothing. And we got 1.5%, 1.4%. For the ones that are not that familiar what the retail sales month over month means, it measures the change in the total value of inflation adjusted sales at the retail level. And why you should care? It is the primary gauge of consumer spending, which accounts for the majority of overall economic activity. Retail sales, in bottom line, what it indicates is how eager the consumer is spending. Okay, so this data in the future and mixed with others, of course, could signal a potential inflation risk, healthier inflation risks based on demand, real demand by consumers, and that could eventually affect and have an effect on the monetary policy by the Central Bank of the UK. We've been following for, I don't know, maybe 2 months from now, all the activities of the UK economy after Brexit, etc., trying to forecast, try to see how the price action is developing according to the fundamental data. And the bottom line is the following: for all that those millennials saying that it was going to be the end of the world if Brexit happens, and they were betting that 1 or 2 months after Brexit we could be at the UK economy almost destroyed, etc. They are all being proven wrong. Actually, this Brexit thing has shown to the world how strong the UK economy is. I mean, at this stage, if there was a catastrophic consequence on Brexit or potential Brexit, we should have seen it by now. And actually, we're seeing the complete opposite. We've been having some bad numbers, but the most important ones are really, really outstanding. What that means? Well, it depends on how you read it, because yes, even though these numbers are after Brexit, it's way too early to call that the positive effects are going to happen now. Of course, that's illogical. But if we analyze this in a perspective that a lot of analysts and people in the mass media, etc., were betting on completely collapse of the UK economy, well, this could be a right indication for the investors if they are really willing to leave the UK, if the UK leaves the Eurozone. The UK stands by its own. That's the bottom line of all this. The UK is doing great with or without the Eurozone. So that's something that maybe the leaders of the Euro bloc are not liking, because I just read that some days ago the president, well, the leaders of Germany, I believe it was France and Italy. I don't remember the exact other countries, but of course it was Germany. They were on urgent meetings because they are really worried that the next, maybe with this kind of results, and the most worried about these great results in the UK economy, is that maybe next Netherlands will ask to have another referendum to reconsider the EU membership. Because of course this is logical. The EU was selling the idea to all the European citizens that the UK will collapse if they leave. That the UK needed the European much more than what the Eurozone needed the UK. And at the end, it resulted, I won't say the complete opposite, but yes, the UK stands by its own. It's so strong that it stands by its own, with or without the EU. And these very good numbers are not good news for the ones that are wanting to tie and to have a strong grip on the EU membership. Because with these numbers, I can bet you that a lot of people from Holland, Netherlands, are going to try it. Are going to say, okay, what if we leave and we have the same numbers? It's a different case with the Netherlands, because I honestly believe that the only country in the EU bloc that could have a exit, could decide to exit the EU and will have very good numbers because of that, is the UK. I don't think that Netherlands is the case, but this has the effect of starting debilitating and weakening the EU concept. But this kind of numbers, the least happy to receive them is the EU leaders, overall the German ones, because they were betting all in the EU project. And having one more member leaving could have that could have a catastrophic effect on the EU bloc, not in the UK. And that's something that I've been managing since the very beginning from Brexit, that the ones that are going to the one having all the problems is the EU, not UK. And apparently I am starting to be proven right. So we shall wait to see what happens next. But this kind of numbers, I think that not even the most optimistic expected these good numbers. At least they were expecting maybe some kind of slowdown, but that is not happening. We have received bad data, but again, the important ones are outstanding. Okay, so well, that's what happened one day after the webinar last week, and of course that had an effect on the cable. We're going to review that. This is the fundamental dynamic analysis on UK retail sales. Okay, I'm not getting to a lot of details. I have explained how these fundamental dynamic levels work. So this is pretty much a Bollinger Band, but instead of considering only price or one linear data, it combines a lot of fundamental data plus other added data. So it becomes a reliable land in the sand to see where we're standing on. Okay, this is the retail sales for the last year. As you've seen, we can see that the last year this starts going up. Actually, after Brexit, is the steepest movement to the upside after Brexit. We had this a bad number, but in this case, this month we were expecting pretty much a flat one. So this gives you an idea what the analysts were expecting. If you analyze what the analysts were expecting in perspective of 1 year and making a fundamental analysis, I have explained that having numbers below this midband, what will have an effect in the future is that they will start shaping in that direction this band. So bottom line, what the analysts were expecting was a data that eventually could have an effect of bending down this fundamental dynamic levels. That means, in fact, a weakening of the UK economy because of Brexit. But that didn't happen. So all the analysts were proven very wrong. Look at this. We were expecting a flat one. This one was the only that actually spooked a lot of traders from the pound having this number because it was, if I'm not wrong, we were expecting pretty much a flat number, so we had a -1, and a lot of traders were spooked from cable. But now look at this. Look how far from this midband is. Okay, so it would only take maybe to have half of this performance next month, half of it, and we will still be at midband. I don't know if this number will modify the UK retail sales expectations for next month. I strongly consider it should, but again, even having the half of it, it will be enhancing having a bullish outlook on this. So I think that it's kind of conclusive that a UK is going to navigate safe and sound after Brexit. I know there are some gossip in the markets that maybe the UK would delay the exit of the EU, etc., etc. I think oppositely, what I believe is that this kind of numbers will start convincing even that not that convinced the UK citizens about leaving the EU. Because think about it, if you're doing right and the numbers of your economy are doing right, after taking a decision such that controversial like Brexit, maybe the ones that were not that convinced will start getting convinced that the best way to go is Brexit. So I see more and more people in the UK starting to support actively the Brexit. And I don't think that the government would deal, and overall, because it's the Brexit administration, to dare to stop or not calling the Article 50. So we have to wait and see. But again, with this kind of numbers, the UK will have a higher self-esteem, and of course that they will feel more than convinced that the way to go was the Brexit, because everybody was betting very seriously on Brexit. Everybody. Well, not me, but investors, everybody was spooking people, saying this is going to be the end of the world, etc. So I don't think that they will quit the Brexit process. And what I believe is that that will actually enhance and improve these performances. Why? Because now the investors are saying that they have no reasons to leave. Maybe some of them, yes. They will have to adapt, but not to leave completely the UK. I mean, you don't leave a country like this. You don't leave a country with this performance, with these numbers. Not a single country in the Euro bloc has this kind of numbers, so you won't leave it. Maybe you have to open some other offices in maybe Paris or Hamburg or another place in mainland Europe. But living the UK, I don't think so. So that should even have what I expect next month is not only having a number here, but very close to 1.4 or even a slightly higher. But we shall wait and see because this number already had an effect, and I'm going to show you why. This is the pound analysis based again on fundamental dynamic levels. And well, this is very typical. We've been analyzing overall this picture for a long time. The only thing that I would like to point out now is to look at how this movement started moving down after Brexit. Then we had this consolidation. Then here is the Bank of England decision on slashing the rates. Actually, it started moving down, but the midband continued going up. But then we had this surge after retesting the 1.2850. That means it respected the lowest point after Brexit at 128. So the bulls were prepared to signal the markets that they are really willing to build higher lows. And respected the 1.28 was the first line in the sand. And look what started happening after that. The market stabilized at the mid-band more or less, and it will help this to continue go up and up. Another reference for this is, of course, the 1.3. That's a ecological level that is working as a support. But remember that we've been analyzing that this complete zone is a multi-decade support. So everything is aligning that the resilient UK economy will manage to navigate through Brexit with 5% of the consequences that most people thought that they would face after a Brexit. This is a closer look, just to let you know. This is if you look, if you zoom in a little bit, you see how well the price respected these upper bands, these lower bands. But here is the clearest one. This is the one that was still looking to the downside, okay? And now in the mid band, it's a 1.3. So what I expect, and I'm going to explain why I have a certain outlook on a potential trade on cable for these next 2 weeks. But, well, one of the reasons is this. We are hitting a fundamental resistance now, so it would face a lot of problems to continue moving up as with no resistance. We are having some good reasons for some traders and investors trying to take some profits here to I don't know, to maybe short a little bit this thing. But as you can see, we have, and this zone of support has been created. Besides being a multi-decade support, the price is hovering healthy above the 1.3, and besides, we have a natural mid-band, fundamental mid-band just at the 1.3 level. So what I see much more harder to break now is the 1.3. And that was the first psychological level that must be respected in order to help the bulls to build a structure on the bullish side to close the gap on in the 1.37 that we didn't close after Brexit weekend. That gap I've been commenting that was not able to be closed, and that's a strong weakening signal. But the market managed to start building demand at these prices. So what I believe that the market is looking at now is to close at 137. But of course, what I expect is that this price should try to pull back to the 131 to the 1.3 to find another support and then continue going up. This is only a stronger zoom in. It's pretty much the same thing, but here look how this is stopped moving to the downside, this midman, and started moving up. The price again is very close to the upper band that it's the 1.33. So maybe we could be close to a resistance level. This, by the way, this level, the 1.33, it's uh, it's very close to another trend line that I'm going to show you next at this level. So here, what I expect is that the market could retrace. That is why I was telling you that I expect a retracement to the 1.31, 1.3 area. Look at this, because this midband is just here. So here you will start having in this area 131, 130 strong support. A lot of bulls will be there, not only because the multi-decade support, but it's also a psychological level, but because of these reasons. And we are seeing how convincingly the fundamental dynamic trend is swapping to the upside. And that's a very, very important because after Brexit, and this is logical, the only way to have these numbers, these fundamental dynamic levels changed are two reasons. One, fundamental data, and second, price action. The price action has been resilient and holding the bearish attacks, and besides, it has been supported by outstanding fundamental data. That is why these fundamental dynamic levels are shaping to the upside. And this is why we need to be updated and we need to be aware of all the things that happen in the markets. Because I don't know, maybe if you had asked me or anybody 3 weeks ago if the trend was to the downside, yes, the trend was still to the downside. There were some bulls trying to buy to run some risks at the 129, 128 because it was a very good deal to buy at those prices, and it was multi-decade support. But yet, the fundamental dynamics were favoring some bearish movements. But now it's the complete opposite, and this only happened. I commented that on Wednesday last week that we were going to wait. I said we are going to wait to have more convincing signals to the upside, and the convincing signal happened the next day. I'm going to show you why. This again, tighter zoom in, just to check out how these fundamental bands work. No matter if it tried to break up higher, it didn't. It continued going down. It tried to retest. This is very important. It tried to retest the lowest band, but it was not possible. But are these are closing prices. These levels correspond to when the price retested the 128.50, pushing at the markets to respect the previous low at 128. So here it has two ways to read it. First of all, the one is it didn't even make it to touch this, and that could be read bullishly. And besides, it stopped at 128.50. So that sends two strong bullish signals. And then look what happened after. This is the day of the webinar, if I'm not wrong. Yes, it is. And look what happened after, one day after. And then the market started moving up and stabilized, and again, look, it's above this mid-band. Well, this is a very, very close view. Just look how fast this turned from August 1st to August 25. This is almost 1 month. Look how much this changed in 1 month. We're pretty much at the same price from August 1st. And look at this thing. Look at next day's projection. This doesn't mean that this will continue, or it could continue like if there was no resistance here. But the idea is that if you compare this, how steep, this is almost a 45-degree movement. So this shows you at least how strong the fundamentals have turned after 1 month. Okay, look how high this could be drawn from now on, and look where were we at August 1st. Well, this is the closest. This is when the price reached the 128.50, and then this is what has done. Again, the closing price was not able to meet this price. So this is only showing us the short-term momentum. Here is the traditional cable analysis using traditional trend lines, etc. We have two important figures here. This broadening channel to the downside. This is the day of our webinar. You can count 2, 4, 6, and 7. Okay. So at this moment, we were expecting more signals to the upside. Why? Because it really got very close to these previous levels. But as you can see, the market respected this level, this low level that I was commenting. So we have two broadening. We have this broadening channel to the downside, and we have what is called a triple bottom with a very low quality. But the thing of this triple bottom is that it appeared like 1 month ago. Then after having this latest price action, it disappeared. But it reappeared with low quality, but it reappeared after this movements to the upside. So this is telling you that we are back to a possible triple bottom configuration. Besides all the good things that I've been telling, I am considering that this will be a correct call for the bulls. You know that a lot of double bottoms are denied, and triple tops again denied, etc. Chart patterns are pretty much useful 50% of the time, so we need to know when to ignore them or not. In this case, because of all the things that happened, overall at these levels, the price action, how the fundamental dynamics levels switched the bias convincingly to the upside, and how it has been behaving, I really expect that this triple bottom should be respected. As you can see, we have one wave that is from before Brexit to the lowest point after Brexit. This is the first wave. The second is this one, the third, where we received our selling signal at this moment. The fourth, the previous Bank of England decision, still having that selling signal active. And then we had this another wave to the downside where it stopped completely. We started having this very good data, the retail sales is pretty much at this zone, and look the effect it had afterwards. So that is why fundamental trading is so recommendable, because you're not trading the news, you're trading the fundamentals. The most likely effect on price action in the future. Maybe you're not scalping, or you're not trading 5 minutes binary options. Maybe you're trading in a 3, 5, 10-day time span time window, but you are in fact not trading only volatility, but fundamentals. And this is very important if you are a beginner. And even if you're not a beginner, I mean, you can call it a month if you catch, I don't know, 2 or 3 this kind of trades. If you know how to use binary options at binary.com, well, Of course, you can have a very good month only grabbing very selected trades using fundamentals. Okay. Do you remember that I was saying that at these levels we were facing a traditional resistance is of this broadening channel? Look at this. So we have here the 133 that was indicated by an upper resistance of a fundamental dynamic level. It was more here, etc. Still the MACD, even though having bullish momentum, it's we're facing resistances here. I'm not saying the market is so hot now that yeah, it could continue going gradually to the upside without retracing. Yes, that can happen. But the idea is following the logic because the fundamentals are not in a rush. That means if you have a good fundamental data, the effect of that could last months or even years. The fundamental traders are not interested in grabbing a profit of 100, 200 pips this week. They think differently. They invest. So that is why this is like riding the highest wave in the sea. Not the little ones, no, the highest ones, just waiting for that very reliable ones. Okay. So, okay, this is how how I understand the market the recent price action. So what I expect is that because of all those reasons and inside a bullish configuration, we should wait or expect a retracement to the 131 to 130 area. Let's go to the live analysis. Well, this is a live chart. As you can see, it looks pretty much like the picture that I showed you because I just took that picture minutes before the webinar to have the most updated data to analyze and to work with. So as you can see here, the market is retesting this resistance. We have the MACD having bullish momentum, but still below the zero line. That is what I believe. I believe that's just a good time for the bulls that took risks here. Think of a bull that really took a risk here or here. Where would be the first safe point where you can take your profits? Here. This is the logical one. It's hitting a decent resistance. And besides, the bulls are, besides the fundamentals and besides the fundamental dynamic levels, we are having the bulls, this net of support at just above the 1.3 is the mid band of the Bollinger Band. So yeah, having a retracement at this movement would help even better the bullish interests because at times people tend to believe that having retracements of this sort could affect or make rethink the bulls their position, their biases. Actually not. In this precise configuration, analyzing the fundamentals, how favorably deviated for the UK economy they've been lately, how that's being reflected in these precise moments from since Brexit, using the fundamental dynamic levels, how this recent week price action, etc. Actually, this a retracement to the 1.31 from the 131 to the 1.3 would be more than well received for the bulls because it is like the latest push that they need to really close this 137 gap. So what I expect is that the market should retrace to the 1. At some price between the 131 and the 130, and then move to the 137. The reference, of course, is a no-brainer. The reference, not a stop loss because it's not tradingwithbinary.com. Gladly helps you to forget about stop losses, but there is a way to trade that maybe a price won't be touched that would work as a stop loss. In this case, You will profit if that price doesn't is not touched. You can use a not touched binary option through binary.com and maybe say, okay, the price won't touch the 128 in the next 2 months or something like that, and you can profit from that. So that is why I'm telling you this number. The no-brainer lowest point should be the 128 or the 128.50. You can look for those kind of binary options in binary.com and see if they fit your interest in trading because not all the people like this touch not touch binary options. The most popular are the rise or down, up and down binaries. But well, there you have the information. Why I'm not considering opening a bearish trade here? Because the market's so hot. I just said that. Yes, we could be wrong, but I would rather there's a saying, a motto in trading that I would how it says uh, it is much better wanting to be in a trade because it is a winning trade than not wanting to be in a one in a trade that is a losing one. So yeah, the market could continue going up without retracement, but you know what? I would uh, I would be happy and I could manage that. To see the price maybe it continues going up, but at some point it will retrace, and there is the opportunity to find a retracement, to open a binary option at a very good price with very good odds, and then expect for the movement. Because if you go to binary.com, you will check that when the market is higher, the less you will get for a bullish trade, for a bullish binary option. Why? Because it's logical. The probabilities are in your side, or at least that's statistically supposed. But the thing is to wait for the market to to drop because that will increase your payout. So that's a smarter word to trade. Not only because you don't have to worry about take profits or stop losses. That means that every binary option is created equal. The best entry point that we find, the best odds and payouts we will receive. And that is part of what's something very important, as important in trading as any other aspect, that is called money management. And overall, the binary options, since you're not dealing with stop losses and take profits, managing this kind of things, trying to find the best payouts in your binaries, it could help you a lot. It could be the difference between a losing month or a winning month. That is why I'm not interested in opening a long trade at these heights. But I am not interested in shorting this because yes, it could continue going up very slowly, but it could continue going up. Okay, so uh, wait me a second. Well, I believe it's pretty much for this analysis. We're not going to open a trade now, just now, because again, we're not having the correct uh, setups. Let me close my screen sharing because it slows a little bit. And in the meanwhile, I explain this latest point. If you have any question, please type in the drop box to answer it. But while in the meanwhile, if you decide to put a question, the thing is this. I'm not opening short trade again because the fundamentals are not supporting that. I mean, if we receive another good number by the UK economy this week, even if it's not especially volatile, but if we receive a 500% or more favorable data of any kind of the UK economy, the most certain fact is that that will help the market to continue its trend. This is a fundamental trend, and you don't play with fire. You don't play against fundamental trends unless you're a very advanced trader. And if you're a very advanced trader, the most certain thing is that you shouldn't you wouldn't be here because you wouldn't need any help. Okay, I assume that if you're here, it's because there is something missing in your trading approach, and these kind of advices can help you to avoid mistakes. Okay, you don't fight a fundamental trend. And in this case, that fundamental trend has been building after Brexit. And having this pound so cheap now will have an explosive effect in some time. Maybe next week. Remember that next week we have the non-farm payroll number in the U.S. I expect that it will be above than expectations. It should affect negatively the pound, but since the latest price actions, I wouldn't be so sure. Maybe it could even have the opposite reaction. We don't know. But the point is that you don't fight fundamental trends. You don't play against them unless you're in very advanced, and a very profitable trader. If not, you just wait. You just wait for a pullback. You just wait for example, if we are correctly biased in the direction and actually touches the 137, and you decided not only to open a up and down binary option, but besides that, a touch option at the 137 with a correct time span time window, that could mean a lot. And opening your mind to try to play some other instruments through binary.com using this data could be powerful. But of course, you need to do your own analysis, get to your own conclusions. If you don't agree, for example, with my bias and with my point of view, you can trade bearishly on this but the idea is I am giving you the necessary information to decide on yourself, decide by yourself. If you agree with me, you will, I would wait. But if you don't agree with me, you know that now you are having maybe the best chances to short it because you've seen the information. You've seen that resistance in the fundamental side, that resistance of this upper trend line of that broadening a channel to the downside, etc. So now you have the complete information to decide by yourself. But maybe if you were missing or a little bit confused on, okay, but is this really bullish or not? Well, you have more context. In my side, I would wait for a pullback to the 130 between the 131 and 130. And look the exact point. This is something that you will have to do on your own. Detect the price that you like. And some point 131, 130. And my time span for a binary option, in any case, in this week, during this week, that price is reached, is that binary option should expire. Let me tell you the exact date, and it's the obvious one, on September the 1st. Why? Because on Friday, September the 2nd, we have non-farm payroll number. And in any case, let's say that the market really made it to the 1.3. And after that, after 2-3 days, it got above the 131. Having a non-farm payroll number, since it's very difficult to try to know how the impact will be overall in the pound because of all these circumstances, being so oversold the pound makes it very hard to trade on the non-farm payroll number. So that is why, if in any case, in this week before the September 1st, the price is reached, let's say the 1.3, the expiration should be at the ending of the September the 1st, that is Thursday. So just keep that in mind. That's my heads up on that. Of course, you can switch your expiration window, the direction of the trade, but well, here is like a compass. The idea of all this information is to give you another compass, another perspective, but a complete one. There's a whole difference between a lot of analysts or, I don't know, some services that are supposed to deliver technical analysis and those stuff, that they really don't give you all the information that you need. Okay, and besides, they bill you for that. So here is completely free, and the information is the exact information I used to trade. The complete outlook. And having a complete outlook doesn't mean that you wouldn't get it wrong and doesn't warrant you that you will get it right. But at least you're having the complete information. And then you can decide. So I guess I've been told by Shadish that we don't have questions yet. So I would like to thank everybody for showing up for this edition. It's 45 minutes in the webinar. So I would really like to thank you and to remind you that for the ones that haven't done it yet, go to the binary.com page and check out the shop section. You will find very interesting stuff there, like manuals, like some the binary.com robot where you can configure your very own automated trading strategies. Go and check it out. I believe that that's a milestone in binary.com because in the future, that will be the link between developers and traders, webinarists and traders to really, really assist you on what is the real demand on traders, what they really need, and how to get it from somebody that is trusted, a trusted developer or a webinarist that you trust, that you like the insights, etc. So go and check it out. And again, bottom line, I would wait a pullback to the 131 to the 130. If it happens before September the 1st, good. If not, we will next week review if we can find another interesting entry point. So I believe it's everything for today. I would like to thank everybody. My name is Alberto Alvarado, and I would like to invite you to join me next week, same time, same place. And remember to trade safe, be safe, and bye-bye.